Good midday, good afternoon, good night, wherever you are. Back on a new video for YouTube, part 3. Sunday, happy Sunday everyone, sunny Sunday. Today we're gonna talk a little bit about the nasdaq from last week and my approach for upcoming week. For everyone who is in the free Telegram channel, have seen my calls or on the social media, Twitter, Instagram a little bit, and I was pretty active last week on YouTube and on the Telegram channel and on the socials a little bit, every now and then. Gave out 3 opportunities last week, both shorts, were pretty amazing setups with large price ranges on the nasdaq. So like we talk about, indices does what indices does, large price ranges, especially from that Asian leg, Asian high. Weekly 4-hour approach last week was dominating by shorts. So if you're shifting to the 4H time frame, I have unchanged my levels, equal highs, equal lows on the higher time frames approach. Simple as that. Just following structure, following momentum from the higher time frame, weekly, daily, 4H, 12 hours, whatever you want to use, just a higher time frame perspective, scaling down to the lower time frames, order flow wise, to see what's happening within that 12 or 24 hour session, and to see how price pulling back to these levels on the order flow chart right here, simple, the footprint chart, combined with the delta. It gives me a really simplistic and in-depth price overview, to put yourself in the best position possible and to know where to execute and when not, which level makes sense to you and which level not. I've highlighted a couple of levels last week on the footprint chart, and as you can see right here, there's a large imbalance. It's a 5-minute time frame, but like I said, on the footprint chart, you can scale down even to the 1-minute time frame, 2-minute time frame, 5-minute time frame, to give you a deeper overview into price. So that is the nice thing about it. To see it really happening from minute to minute, to see the delta changing and the volume increasing during a specific session. Nasdaq, usually I'm focusing on the higher to the lower time frame approach. We still have that levels right here from last week. Beautiful, nice movement. Right here we saw pretty nice imbalance on the footprint chart. We see a spike back of liquidity around the London/New York overlap, and we see a tank down, delta shift, volume shift. Same thing within that price area we're seeing happening right here. So this was the London-New York overlap, and this was the London session. So usually London/New York around London opening a little bit after, we see usually a wave into indices as well, but like I explained in the last videos as well, usually the waves are smaller than the New York session, because simple to say, New York is indices is the New York, Nasdaq, US 30, but it doesn't mean you can execute around the London/New York overlap as well, or a little bit in front of that. Like I said, we had 2 waves right here, short orders down, large tank. So, and the New York session, that move was almost 4 times bigger than this wave, but this wave was still a few hundred points, and this wave was a huge wave. I think we count over 400 points, something like that, So it was pretty nice price area right here. For next week, I still see a tons of bears. We had a little pullback right here, 4H, 12H. We do could expect price to grab a little lower into this lows right here. That's what I think, you know. But I don't trade what I think. I trade what I see. And like I said, on the footprint, you really can see what's happening minute by minute, and that make it so super powerful. So I don't have to trade what I think. I trade what I see, you know. But you can have your overview on the market. So I'm not doing weekly analysis and stuff like that. Just a simple approach on the higher time frames for myself, to see where price could potentially push through, and then I use the footprint chart to show me where price really going to push through during that specific session, you know. And usually London gives me the first signs for the New York session, you know. There's also a little thing, Asian price range, price will most of the time push to that high from the Asia and then shift during the London session. London make a little correction, and the New York tank price onwards. Even if it's a buyer's or a seller's market, that's how it works, and that is how price moves from E to B, you know. And I just want to grab a piece of that part, you know, and I want to put myself in the best position possible. So that's it, you know. Back in the days we did weekly overviews and stuff like that. Still was great. We have a ton of information available in the member zone about it as well. But as a scalper and as a day trader, you really see the market from price range to price range, from day to day. As the time goes, you grow, and yeah, that's it, you know. With the thing, really, weekly time frame, still a lot of bullish correctional move is spoken about in the first video, I think part 1. Daily time frame still shows some signs that could price push a little lower before we're gonna see him probably shift higher if we don't break these lows, you know. But to be honest, long term I really can't care less about what is price going to do, because as a scalper or day trader, you don't hold your positions for days or weeks, you know. That's also not my plan. I'm not comfortable with it. I like to be in a session in and out. Sometimes I have a trading day for just 15 minutes, you know. So yeah, it's simple. Analyze the charts an hour or a half an hour or 2 hours before. Set your alerts in the levels you want to see price pushing through, in levels of imbalance, and go on with your day. Do productive things, and you know, that is a thing I can advise everyone, you know. It gives also a lot of peace in the mind, mental, physical, you know. Yeah, that's simple my thought process, you know. Simple to say. Just set your alerts and enjoy your day, and come back in a specific session. For example, if you're trading the New York session, if that's your session, that is the only time you have to sit in front of the chart, you know. There's no need to spend 24 hours behind screens, you know. Nobody's gonna be happy about that, you know. And it gives also you know, you need to relax your mind a little bit. You need to recharge a little bit, you know. That's also a thing that I do over the weekends. I travel a lot, and you know, that's it, you know. Simple. Yeah, probably I'm gonna share I'm gonna share a couple of ideas during this week, you know. Usually trading 3-4 times a week. During the London or the New York session, depends where I am at that moment, which part of the world, you know. But that is also a thing why I shift a little bit more to indices and all, because I'm not so fixed on one single time zone, you know. So it gives me the opportunity to trade. If I'm in a New York time zone, I can trade the New York session. If I'm more in the Europe time zone, I can decide to trade or the London or the New York, whatever, you know. If there is an opportunity, I will attack and I will execute. If it's not there, you know. Simple as that. Yeah, all that highs and lows that you see in front of you, pretty. This was also a nice number, by the way. This was a round number, 15,000 number, which is a round institutional number, and you can see when price returned back to this level on the lower time frames, 5 minutes for example. We could identify in the balance right here, also return back in price, equal highs. You can see how price grabbed that liquidity out of this zone, out of this high, and then absolutely dump during that first hours of from the Frankfurt to the London session. You know, this right here is start of the London session, and then we move away from this level entire hours. Then we created a new level right here, which is around 8, and then price returned back to this level a little bit later, and then price tanks to the downside during the New York session, returns back again. That's also a great thing. If we draw this level a little bit more to the right, you can see around the New York session we push a little bit higher again, and then we see the third tank. So almost 3 right here and right here. We count 3 great opportunities right here. I'm not saying you have to take it all, but you know, if you can identify those valid imbalance levels and not random imbalance levels, so you could validate them on the footprint chart and see how delta return back to this level and the volume increasing or decreasing. Usually looking for increase of volume, large volumes that is entering the markets with a nice spike of liquidity, showing me more imbalance, showing me there is sellers activity or buyers activity or whatever your market you're looking to. This is a thing that you want to see, and this is where you want to be, you know. So yeah, that is the thing I really enjoy about trading with my supply and demand levels and with my footprint elements and confluences, which gives me real clarity in my trades, you know. So your hit rate will definitely going up as well, you know, because you get more clarity in your trading. Back in the days I had still a great win rate, easily 60 to 70%. If your risk to reward is great, you're a winner. But nowadays I can trade less and I have a better win rate as well. So that is simply growth over the years, you know, and that is a great thing. So probably will never stop with trading order flow as well, you know. So love talking. We almost 14 minutes up right here, and this is just a little Sunday prep talk, motivational talk, you know, being a little bit more active on YouTube. Part 3. Let's see what the week brings us, and trade safe, be healthy, and peace and ease at the mind. Peace out. Greetings, Kev. Bye.